Welcome back to Lesson 10 of Value Investing in Growing Companies. Hi, my name is Rachel, and in this lecture we will be looking at some methods to shortlist the best stocks among tens of thousands of stocks worldwide. It is again advised that an investor should use his own approach for stock selection. He can either use a top-down approach for searching the best-performing economies of the world through media, or he can use the new methods like stock screeners, which are available on different financial websites. In the age of Benjamin Graham, it was highly difficult to track the fundamentals of all the companies. Monitoring dozens of companies and keeping track of each quarterly report was a messy workload. So one had to rely on newspapers to shortlist the best stocks. Now let's look at some of the methods we can use for shortlisting companies. 1. Brokerage houses. One of the easiest ways to check on the latest trending stocks is to stick with your broker and rely on his buy and sell calls. There are thousands of brokerage houses out there with astonishing research. Some of these research reports are uploaded on their websites for free. However, there are two major drawbacks on these research reports. As the brokers make commission on our transactions, we know they would try hard to make us do frequent transactions on various stocks even if the selected stocks are fundamentally poor. These tips or calls might be hazard for value investor in the future. Secondly, the research conducted by the brokerage houses is public. This means the market can realize the potential gain of the stock before the value investor. This can make price hike and value investor would be unable to make the potential gain. However, there is a catch. We can still benefit from the broker. On inquiring and confirming from the broker, if the stock has performed well the following quarter, the value investor can do his own detailed research and take position if the stock is fundamentally strong and available at a bargain. 2. Newspapers and magazines. There are dozens of newspapers and magazines that highlight stocks that are performing well, have a good or bad news, or going into expansion, or launching a new product. Some of the most famous ones include The Economist, Kiplinger, Bloomberg Businessweek, Fortune, and Investor Business Daily. Magazines and newspapers are really good in giving detailed analysis of companies, news related to them which most probably is not available in annual reports. I will repeat again, newspapers and magazines give news that are not available in the annual reports of the company. Warren Buffett and other investors always kept reading to find the best company for themselves. I really love this quote about reading by Victor Hugo. To learn to read is to light a fire. Every syllable that is spelled out is a spark. 3. Television programs. Many channels are now dedicated for financial and economic activity in the region. The discussions done by the television gurus can be acknowledged. However, there is a red flag. A lot of the discussions on television are market noise and rumors that a value investor should avoid. Some of the best shows on stocks include Mad Money with Jim Cramer, Your Money, Squawk Box 4. Paid and free online websites. There are now many websites that are either paid or free online. You just need to follow the news from these websites. However, again, it is advised not to blindly follow the news or blogs on these websites. One needs to do his detailed research before buying a stock. Some of the famous websites include investing.com, Bloomberg, Reuters, MarketWatch, Morningstar, and many more. 5. Stock screeners. Stock screeners are now the latest technology to monitor and shortlist stocks. I use stock screeners for my own use as well. Many websites now provide stock screening for free on their websites. We can use ratios like price to earnings, price to book, earnings growth, sales growth, to shortlist our stocks. We will be covering the methodology of using a stock screener in the upcoming lecture. Okay. Now that we know how we can use different means to shortlist our stocks, in the next lecture we will be looking at how to use stock screeners of investing.com and Google Finance. Till then, happy investing!